Ladies and gentlemen, good day and welcome to the Q4 FY23 results conference call of Midhani Limited, hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amit Dixit from ICICI Securities Limited. Thank you, and over to you, sir.
Yeah, thanks, Yusuf. Good afternoon, everyone, and thanks for joining the call today. At the outset, I would like to thank the management for giving us an opportunity to host this call. From the management, we have Dr. Sanjay Kumar Jha, CMD, Mr. M. Gauri Sankara Rao, Director Finance, and Mr. T. Muthu Kumar, Director P&M. Without much ado, I would invite Dr. Jha for opening remarks, post which we will open the floor for an interactive Q&A session. Over to you, sir.
Thank you, and I extend hearty welcome to all the stakeholders, shareholders for this important conference call after our annual results. Dear all, in fact, this year has been a very unique year for Midhani. Unique in the sense that even though we have get the sales of 871 crores, but we had some idea that PAT has come slightly lower compared to the previous year. But in addition to that, this was, I will come to that in our discussion afterwards. The lot of challenges we have faced this year, that cost of power has gone up extensively. Cost of our fuel also has gone up extensively, almost 1.5 times compared to previous year. At the same time, the raw material cost also has seen a quite big surge in the raw material consumption. Cost of the raw material, not consumption, the cost has gone up. So considering all three adversities also, if you see our EBITDA is almost maintained up to that similar level as we have got from the previous year. The reason behind that, lot of efficiency, if you see our specific power consumption has come down, and also our specific fuel consumption also has come down. So it has compensated our that cost because of this. But in addition to that, the raw material cost has also given a lot of impact. And in that, our outsourcing, that whatever used to do outsourcing has come down. The two major developments in this year, that our Rohtak facility, which was already, I was interacting with you earlier, started working, and we have got this year in just one quarter. In fact, it has worked in the last quarter only. In the last quarter, Q4, we have got the sales of 32 crores from Rohtak. And our white plate mill, the project which was commissioned almost in couple of months back, there also we have got it has stabilized now in this year, and we could able to get almost sales of around 219 crores from that white plate mill. In addition to that, the saving which I am talking today on the outsourcing has come because of the operation of our white plate mill. During this period, a lot of other facilities like 8-ton vacuum induction melting also got commissioned. Just now we have crossed 100 heats also from that equipment. And this equipment has given in the first year itself, just initial months itself, we have got a output of a alloy called alloy C276. That business we have could captured only because of that VIM, the vacuum induction melting 8-ton. And using our white plate mill, we have done a very good substitution of the import, that is of the alloy 276 plates and seats, and those achievements are very good, very strong foundation for the company. And we are expecting now that this business is going to grow further in the big way, because as of now, the entire quantity in the value of around 250 to 300 crores requirement is getting imported in the country. So our idea is that to capture that market as much as possible in the coming days because of that mill. In addition to that, this mill also has done a lot of new developments. We are able to develop the armored steel, which we used to get from the outside earlier. Now, armored steel plates we are making ourselves, and we are doing the armoring of our vehicles, which has been done in our Rohtak facility. We have also done a lot of export area. There is a tremendous progress in the sense that many new alloys we have developed and we have supplied to the overseas customers. And there is a lot good indication for this year based on that we are expected to get the good amount of orders coming from export market also. In addition to that, this year has seen a highest ever order booking from the aerospace. We have crossed 130 crores aerospace order we have got. It is highest in the history of Midhani. At the same time, a super alloys category, we have booked almost 138 crores order we have booked in the super alloy also. Titanium, of course, we are doing earlier also, but this year also titanium has gone a good order booking. And direct export, which we used to get earlier, we used to take the deemed export also into our account. So this year we have focused on the direct export, which we have got almost an order booking of 35 crores in the last year. So our order opening from that side. And good indications are there. Some of the highlights on the export I would like to mention to the investors. We have supplied a alloy called alloy 7 rings to USA, and that firm is supplying to the SpaceX for their launch vehicle. So this was a very small amount of order, but it has gone for the evaluation. Once it is successfully evaluated, they are going to place the order for these rings from our company. We have also received the 3 different orders coming from Pratt & Whitney, which is already Poland of their branch. Already we have got the order, and we are expecting the other places also. Pratt & Whitney is going to place the order, Canada requirements, for other countries requirements also. And we are expecting that Midhani will be approved as a supplier of Pratt & Whitney in the future, and the audit is expected in the month of next month. I am also happy to inform you that we have also got the order from the Israel, Rafael from the Israel, and there we are already supplying margin steel for their application. And subsequently, the GE Healthcare also has approved us for a special alloy which is being used in healthcare system, that is 909. And Midhani is going to be one of their approved supplier in the future. And initial orders already we have received, and we are going to execute that. So like that, in the oil and gas also, a very leading, a big company of the US, they have also come and they have given the trial order to us. And I am sure that once it is getting approved, we will be a regular supplier. Just recently, Rolls-Royce also has audited Midhani, and also we are going to get the initial requirement from Rolls-Royce. We have received the order, and we are going to execute for their requirements. So like that, many our people are supplying to Sweden, Turkey, and Germany for the different type of requirements. So export is the one thing I will say this year, the 2023 has been, 22-23 has been an excellent year for Midhani. In entering in the domain of the export area in the big way, because we are in the multiple customers, many customers, and that also in the high-end customers, basically coming from the aerospace and healthcare. Those things are as high and premium market we are trying to capture. In addition to that, the many other indigenization program for our domestic projects also is going on, which includes already we have executed for the advanced medium combat vehicles for our aircraft for our AMCA program. Also, Midhani is supplying material for Kaveri derivative engines, which is going for making the unmanned air combat vehicles, and many other, like, of course, LCA is already, we are in touch with that. And now currently we are trying to see that how we can utilize the material which is using for our Sukhoi aircraft engine. And Adur already we have done earlier, as I earlier also said about titanium alloys. Now super alloys also we have made the blades, turbine blades for putting in the Adur engine. And this year our skull melting furnace also is almost commissioned, and now we are making a special alloys used for that in the biomedical applications. So it is under trial now. Once it is approved, that material, that will be another very good opportunity for us to enter in the new horizon of the business. And my new project, 10-ton vacuum arc remelting VAR, new plant of titanium is coming up, and we are in the, almost going to commission very shortly that plant also. So the project is also getting completed. So in this total activities, is full of activities for us, and we are eagerly waiting that how we can get certain other requirements. One of the major products in the bulletproof jackets, this is the new development, which I think the investors should also see, that we are made a bulletproof jacket, special one for Air Force. It's called Garuda, and that is first time developed in the country, having very unique features, protection level of BIS level 6, NIJ4, and also we have made our product acceptable to Air Force, and we are going to supply shortly. This month also we are going to supply. In the next month we are going to complete the order. So this will be one of the unique developments by your company, and that is being I think the first time in the country, and we are the only today. So will be trying to see that how this product can be used for other armed forces also. And there are many other developments which I would like to answer as we go for the questions and all. So I will try to close here. If you have and on financial and aspects and all, once the questions are there, I have Director of Finance with me. Operational efficiency and all, we have Director of Production is here, so he will try to answer all those areas. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Manan Poladia from MKP Securities. Please go ahead.
Hello, sir. Good morning. Am I audible?
Yeah, audible.
Yeah, so my question is, basically from what I've seen, your gross block till about approximately 2 years ago was about 430 odd crores, and you've been doing a revenue on a steady state basis for the last 3 years of 800 something. So that is in fact of maybe 2x. Now what I want to understand is, sir, you put in about 600 crores of capex in the last 2 years, right? In the 2 new factories that you put up. What I wanted to understand was what is the potential in fact from these 2 factories?
Yeah, in fact, you have put very right question, that why your production is not increasing. That is, I think, your question in...
Yes, sir.
Okay. In fact, earlier also I told this projects, whatever we have commissioned, and we have got, there is a lot of technological challenges we have to resolve. So if you see our one investment, I'll talk about one of our major investments. It is around 500 crores plus white plate mill. So white plate mill was made designed earlier to use only a specific product. So their turnover was expected was very less. But we have to modify the equipment for the commercial application. And those things require some time. So I think this year, I say it is a year for developing the products using this facility. You will see the impact output of that in the next coming years, months and years.
Okay. But sir, my question also was that what was the expected impact? In fact, basically, like, are you expecting a 2x sort of number on this 1.5x? Is there a number that you can quantify?
Number quantification, I cannot tell you at this stage, but as market potential is very good. And
right, sir.
Many of our products have we have given for qualification. We are expecting the result. If the results are coming all right, definitely it is going to increase, as you said, 1.5 times, it can go for 2.2 times also.
Okay, understood, sir. So, and is there anything that you are guiding on a consolidated basis for the company in terms of the next 2-3 years, like in terms of sales or PAT growth?
At this stage, that value is figures and all I cannot remember. Definitely, our target is in line with the requirement of the expected line of the ministry, where you might have seen the Ministry of Defence also is going to increase the production almost by 1.5 times, total production output, in the next 2 to 3 years. So Midhani is also aligning with that.
Okay, so and on the operating profit margin basis, you would say 30% is a good number to go with?
Operating profit margin, I don't think it will be maintained at that level because once we are going in the products which are highly competitive in nature, the market, that much margin may not be there, but we will try to see that how we can, as I have told in the beginning only, the fluctuation in the raw material is a big issue today.
Okay, but sir, honestly,
that figure is very important. Geopolitical situations are not very favorable.
I completely understand, sir, with the Russia-Ukraine war as well. Is there a 5% range that you would guide, 500 BPS? If you were giving breathing room on both sides, then what range would you guide?
It will be you said that.
Sorry?
What I could not follow. You said within 5%.
If you had to guide an operating margin range within a
5%.
Sir, within a 5% range, if you had to guide OPM, then what would you guide, sir?
I have not. You are telling now it is 30. It will become 25. Sure, that's what you are telling.
I'm asking if you had to guide with a 5% range for margin of error, then what would be your guidance? That is my question, sir.
That's why I said 25 to 30%.
Okay, understood, sir. Thank you.
Thank you. The next question is from the line of Nikunj Mehta from Wealth Guardian. Please go ahead.
Sir, good afternoon. So I'm looking at the numbers for the last 5 years, and we've put in a lot of capital. Top line's been flat. Profit has gone from 180 to about 217. But at the same time, our inventory has gone up from 500 to 1225 crores. That has kind of resulted in us being 100 crores odd, 90 odd crores of cash when we had in 2019. Today we have about very close to about 500 crores of debt. And capital employed has expanded, but top line is still not crossing about 900 also. It used to be about 700 then. So on the P&L side, whatever developments that you spoke about in your opening remarks, that is encouraging. But this inventory, do you consider this as an issue? And what are you planning to do as a team to correct this issue? And a year or two down the line, where do you see this balance sheet skewed up towards the working capital intensivity? How do you plan to solve this working capital issues?
Yeah, in fact, you have rightly mentioned about that inventory issue. We are also very serious in that. And you might have seen that this year, in spite of raw material costs going up, then also we have maintained the inventory on the tune of hardly there was a very less increase compared to the previous year. Earlier it was increasing at a very high rate. So this year we have controlled. I will ask Director Finance to add further on this issue.
Yeah, Mrs. Mehta, you rightly said that inventory has gone up, but this is mainly two reasons are there. One, we are establishing new facilities, like WPM has started, Rohtak facility has come, and we have started WIM 810. Because of new facilities and our production value also is going up, production of items is going up. So if you see, but compared to Q3, Q2, now the inventory is coming down, which we are planning this year, it will come down further. As new facilities, because of our production timelines, some quantities are there, which we are going to reduce in this current year, 23-24. And as far as the raw material inventory concerned, it has come down. But WIP, because in the production process, the inventory has gone up. But compared to Q3, Q4, it has come down. We will reduce further. Our aim is to reduce further and make the end product finished and dispatched to our customer that we are planning in 23-24. 23-24, our target is to reduce the inventory.
Any quantification if you can give? How much the reduction could be in number of days or in absolute rupees crores?
The absolute number of days means it depends on our range of production. If we produce more value items, inventory value will increase. See, Midani will produce low alloy steel to very high alloy. That means high-end steel also is there. When we produce more high-end steel to our requirement of our customer, the inventory value will be more. When we supply to the commercial grade or some low alloy steel, it will be less, like when we supply to the railway sector. Now, present condition is we are completing the supplies pending with VSRO, VSSC and the HSFC. There some supplies are there for which orders were received in 2019. If that orders we are closing this year, definitely this inventory will come down by around slowly, maybe 100-120 crores like that it will come down this year.
Interesting. Thank you, sir. That's helpful. Just one question more on the...
Sorry to interrupt, Mr. Nigam.
This is my second question.
Sorry to interrupt, sir. We are afraid that we will not be taking more than two questions.
This is my second question.
Okay, sir. Please go ahead.
Thank you. The second question is, sir, that within the inventory we had this number of scrap that was building up. If you could guide on that also, what steps are we taking to reduce that, sir? Thank you.
See, as I told you that when we are producing VSSC, HSFC products where we have high margins, these products normally rejections also will be there. So definitely scrap inventory also will go up. Once now VSSC has given a dispensation to Midani that 80% of scrap also I can use in their product. Once I use, definitely my scrap quantity also will come down. If you see, the scrap value also has gone up because recent days all raw material prices have gone up. Normally we value scrap only to the extent of the content of the in the product, whatever is the material content is there, like moly, nickel or other products, whatever is there, to that extent only we will take with 90% recovery rate. So, but the prices have gone up last year, 22-23.
Right.
That's why the scrap value also appearing more. But this year, we are going to use the scrap, so it will come down.
Thank you, sir. That's very encouraging. Appreciate it.
Thank you. Ladies and gentlemen, before we move to the next question, a reminder to the participant, anyone who wishes to ask a question may press star and 1. Next question is from the line of Anuj Kapil from Taurus Mutual Fund. Please go ahead.
Good afternoon, sir.
Good afternoon.
Yeah. Sir, I just wanted to know that how much amount we are expecting from government spending on indigenous defense orders over the period of, like say, in next 3 to 4 years?
The government spending today, last year if you see almost around 1 lakh crore they have given to the capex for indigenous industry. And this year also, you can say that will be on the growth will be not less than 10 to 20% easily. So I see that the indigenous requirement of the materials or the equipments are going to increase in the future more and more. And not only Midhani, many other industries will get benefited because of this.
Okay. And so my second question, you are focusing on the export as well. So how much percentage you are seeking, like it will be increased by end of FY24 in export segment?
We are targeting 10% of our sales on the export. 10%.
There will be increment increase in the 10% sales in the sales by 10%.
Sales, whatever we do on that 10%. So last year, if our export was not so high, it was low only. It is almost cost to around 35 crores.
21-22
but 21-22 it was almost 10%. So this year also we are targeting that we should go to the level of 10%. So it will be around 100 crores.
Okay. Thank you so much, sir.
Yeah.
Thank you. Reminder to the participant, anyone who wishes to ask a question may press star and 1. Next question is from the line of Viraj Mithani from Jupiter Financial. Please go ahead.
Yeah, good afternoon, sir.
Good afternoon.
Sir, I would like to understand with all this new initiative coming on stream, what would be our top line growth and the bottom line growth? Would be some ballpark figure or some guidance on that?
Top line, almost we say around 20% growth is expected.
This is from this coming year onwards? We're talking about FY.
Yeah, coming onwards.
And the margins would be the same level or would be lesser than the last level?
Margin, this market is very dynamic today, especially on our major input cost is coming from the raw material, then the fuel and power. These three contents, if the prices are stable, then we have no issues. But what happens that initially, if you take order when the prices are low and in between prices goes up, we have no scope of getting that compensation from the customer. So it may create some problem in the future. We have tried to, as I told in the opening remarks itself, we try to offset this increase by doing certain operational efficiency. But there also you have certain limitations. So we could manage to this year to make our EBITDA level same, but then it has to be seen in the future how to. And then you know that the finance cost also has gone up because of high interest rate. Now the lending rate is very high. So those things are affecting definitely on the pressure is there on the profitability. Otherwise, efficiency and all we definitely are going to improve.
And so my second question is I have been following this company since 2019. I fail to understand being such a unique company, we are not able to grow compared to our peers. Probably we should be the best growing company. What is it? Is it the business model, lack of initiative by the management? What is it that is hindering the growth? If you can throw some light on that.
Yeah, you have, the growth is mainly, we had a certain level of limitations based on our capacity. So now only those, as I told in the opening remarks, this capacity, whatever we have invested the money, it has come to the operation now. So you will certainly see the impact of those things in the coming years. So definitely when a company is investing some capex, you will find that investment is there, but the output is not there. It will take time because the defense items, whatever we produce, it takes time to get qualified. A lot of analysis, verification. Even if as I said in the export market also, when I am sending a product to them, they will check for their application, then they see that how it is performing. Then only they will approve you, so that further business can be seen afterwards. So I expect that now these things are going. We have resolved many things. It is going to give the output on the coming years.
Okay, sir. Thank you and all the best for the future.
Thank you.
Thank you. Before we move to the next question, a reminder to the participant, anyone who wishes to ask a question may press star and 1. Next question is from the line of Shirom Kapoor from Prabhudas Lilladher. Please go ahead.
Hi, thanks for the opportunity. Would you be, this is a bookkeeping question, could you give us the segmental split of revenue between your segments of, defense, space, energy, and the rest? And similarly, could you also give the order inflow? This is for FY23.
Yeah, in fact, for space, we have given almost 40% has gone to space. Then followed by defense has gone to 24%. And PSU includes, in fact, PSU also mainly in defense only, but there we have around 21%. And the other part is around 6% is balance, goes for the energy and other sports.
Okay, so that means defense actually, if we look at it, is about 45%.
Yeah.
Okay. So that's 40 for space, 45 for defense, and 6 for energy. I think that doesn't add up. Are we missing something? Because that adds up to 91 odd %.
Yeah. And 5% export, I have told you, 5% export is there. Then
sorry. Right, of course. Yeah. And there's exports. And could you give the same?
All amount we have put in the railway is very meager, maybe coming to hardly one. This year also we have started supplying axles. We have supplied 400 axles. We have supplied to railway for their new coaches are coming.
Got it.
What type of coaches are there? Now for ICF I have supplied.
Okay, understood. And would you be able to give the similar mix for
segment is also going to pick up in the future.
Okay. And would you be able to give the same mix for order inflows as you usually do in your annual reports?
Order value. Order booking last year it was 900 plus.
No, I meant the order inflow by segment, defense, space, energy, if you could give that split for
order split,
Yeah.
Order split also we have. I'll just to see my exact figure. I will tell you. Okay, first no. India.
Just 1391 crores order.
Just you hold. I'll just tell you.
Sure.
1391 crores is the
Yeah.
That defense ज़्यादा है. Defense is about 40. Defense है. No defense is increasing.
Yeah. We have defense has gone up. Almost we have 40% coming from the defense now. Order booking is there. Order position. Space has coming down. Space has become almost around 30%. And aero we are talking around also is there 10%, but aero is almost you can say the defense only.
Right.
So like then we have the energy, armor.
No, armor is going up.
Armor going up. So if I combine armor, navy, the defense, almost I can say 60% we have, 60-70% we have the defense now.
Okay, so about 60 from defense, 30 from space,
and export also we have almost around 10%, not 10, 10% will be there, no? Around 10 to 12% we have the space. Export also booking is there. Railway also we have the booking of around 2 to 3%.
Okay.
So like that order distribution is there. It is now changing. That total order booking map is changing now. And you see this change also coming in the different way in the future also.
Oh, defense is encouraging one.
Defense is going up.
So
but space also there is a good visibility, and you must have seen today also they have given one successful launch. So space is also going to pick up again because their launches are increasing now. So it is
defense and space. So you see, which are your two dominant segments, defense and space. There's a good outlook in both, right? It's not that maybe only defense will be the driving factor going forward.
Hey, we have a good diversification now. Railway also we are trying to capture as much as possible, whatever we can do as per depend on our capacity.
Okay, understood.
Sir, possibly energy sector also is a good possibility now because, as I said, almost 125 crores order booking we are having from the energy. Out of 1350, 125 crores we have for energy also. Energy includes our special grades which I have told about C276.
Right. Okay. That's very helpful. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Namrata, individual investor. Please go ahead.
Good afternoon, sir. My first question is, what is the peak sales that we can achieve on our current asset base?
Peak sales, maximum sales you are telling. Maximum sales, there is no limit, I will say. I will not say there is a limit, as some investors rightly told that the way it was supposed to grow, you are not growing. So the maximum limitations are there. Certain deficiency in our working infrastructure. Already those things we have filled the gap now. So I am sure that those things will increase. And as I told earlier also, we are expecting the growth of not less than 20% in the future. But as you have told that numbers, figures, let's see, we will be reporting as and when the figures are coming, improving, we will be reporting investors.
Okay, my second question was, are we looking at any other products, other new products going forward?
Yeah, this year I have told we have made plates, sheets of white plate mill already we have made. We are also made the pipe also. We have done the pipe by extrusion. It was not there in the Midhani earlier. So this also we have installed one equipment. That equipment technology has been established now. So already 5 crore business we have done last year from there, and we have good amount of orders coming from there also on that facility. So you will see that those things will be picking up in product range. And axles we have made for the railways. So that axles also, last year it was only 400. Now we have the order of
1,500.
So already 1,500 orders already we have in our hand now for axles.
Container Corporation India around 540 and railway is about 1,000.
So Container Corporation of India has given that this thing. I'll ask my Director of Process Marketing to apprise you on this, on the new.
Thank you.
Enormous increase in the requirement of the axles. Now this Container Corporation of India, they are given a trial order of 540, and on successful completion within 2 months, they are going to be tender for another 20,000 numbers. And this railways also, now we are having about 1,000 numbers for executing, and on completion of that, there is going to be a tender for another 20,000 number also. That also we are upgrading our equipment, and we have put our CNC lathe, 2 machines we have brought, which is worth about 10 crores, and we have installed it. And this will enhance our productivity so that we can supply in short span of time. Apart from that, other equipments already CMD has briefed that B-Maton, which we had installed, that is going to help in long way to give this grade 2 76, which is being imported to the tune of about 350 to 400 crores. So that will become 100% indigenous, and we will be the only party to able to supply, mainly for the energy sector. So otherwise, there is going to be a good future. So only we have to augment our equipment, supporting equipment, and supply the material.
Okay, sir. Thank you.
Thank you. Next question is from the line of Viraj Mithani from Jupiter Financial. Please go ahead.
Yes, sir. Thank you for the opportunity again. Sir, any update on the Nalco JV which you are planning? Hello?
It seems that we have lost the connection for the management. Please stay connected. We will reconnect the management again. Ladies and gentlemen, we have the line of the management reconnected to the call. Mr. Viraj, please go ahead with your call.
Yes, thank you for the opportunity again, sir. Any update on the Nalco JV?
One update is that whatever Nalco JV we have decided to put there, we have seen that recently we have appointed a consultant since we wanted to go for taking the money for the project. So for that we wanted to make a bankable reports using that one of the consultants. But to our surprise, the consultant has given that requirement of product which we wanted to plan in that facility is very less in the country. So earlier report the projections were very high, that projections have not reaching even to the 10% also of that, whatever we wanted to make there. So considering that, we are rethinking that whether we should go to that scale of that project or not. So we have not, we are still under the analysis only. But meanwhile, your company is having lot of other opportunity where moment I invest my money, I can get the output and market is available. As I told, the export market today is very much. In fact, many export orders we are not booking today because their delivery time is very less and they want the product of the different type of where we need the additional facility we have to put in our plant. So we want to improve our infrastructure to meet those requirements. So there only our focus is there, how we can quickly make our products in large volume to meet the requirement of overseas customers, which includes in the area of aerospace and oil and gas and other commercial applications.
And sir, what will be the capex figures for the years to come, like at least 2-3 years? Will there be any significant capex or will it be just an opex?
No, we are now focusing on that whatever capex we have invested, we want to take the output from there. But nevertheless, the capex is not we are stopping here. In fact, this year also, last year also we have almost spent around 70 crores. 76 crores already we have spent on capex. And this year also we are targeting on a similar level. So around 100 crores.
Instead of major capex, whatever capex we have invested so far, for that any additional facility is required, there we are concentrating.
Yes.
So this will
we are augmenting our capacities, modernizing our areas where the equipments are very old, and see that we can meet the requirement of international customers and increase our volume.
Okay. So we have sufficient capacity for the new initiatives to take care of. Is that true to think?
Yeah.
Okay, sir. Thank you and all the best. Sir.
Thank you. The next question is from the line of Rohit Ori from Progressive Shares. Please go ahead.
Hi sir, congrats on being a part of GSLV launch F12 and NVS01. So my question is, any more orders from ISRO related to the same, or how is ISRO seeing things ahead?
Yeah. ISRO already the 5 PSLV which they have outsourced given to the private firms. So there already we are in the process, and I am expecting that any time this order will come. So already that price is over. We are going to supply. This is coming a new order.
100 crores order.
100 crores order we are going to get from our L&T. L&T is the supplier in that. So it is not that ISRO only it is coming from now VSSC. Now it has gone to the private firms also. So with the success of the different launches by ISRO, I think this is going to pick up and coming in the big way.
Yes, sir, you did mention about Hastelloy and the opportunities with probably L&T Bale and others. Sir, if we can put some number to that what sort of opportunity can we see from this initiative in the next 2 years or 3 years?
How much we have booked?
We have order for about 150 tons.
Already we have booked the order
For 200 tons.
of around 200 tons, coming to around 100 crores.
100 crores.
100 crores already we are having.
Another tender is
Or another tender is coming now. I am expecting that this year it will be around 200 crores order will be booking on that side.
Okay. So, sir, this 200 plus 100 is in addition to the already existing 1300 crore that we had on first.
Yeah. In fact, we have already price negotiated 550 crores. I am expecting in this quarter only. We added.
Oh, okay. And this also includes the axle which might come from the requirement of the government and maybe for Vande Bharat.
Yeah, many things are from the government, from defense, from missile, lot of our strategic government sector that is coming from.
Okay.
Akansha. Akansha is our.
So my last question is related to the land requirement and the request that we were putting in for Adi Batla. Sir, any improvement on that or any positivity shown by the government over there?
Adi Batla, we have not requested for land because already we have our land in Hyderabad. Already we have the land enough in our Kanchanbag area, and that land itself is today is very, very costly. In fact, much higher than whatever the Adi Batla is, the land is there. And we are also very close to airport. So this part is why you should go and make a separate facility there.
Okay. No, my thought process was that you wanted to come more closer to the aerospace via Adi Batla. That's why I asked the question.
Already we are very close to aerospace. In fact, we are already in trying to discuss from the Tata Boeing to how can we meet their requirements of certain special alloys and all. We are discussing with them, and we are interested to participate in that. We are also thinking that how we can enter in the supply chain of the saffron. So these are all in the line now. We are trying to, because if you enter in their supply chain, you have to first get it approved against the international supplier. It is not the Indian, because raw material supply is only through the international source for them today. So anything we have to have we have to compete with the international supplier, and they will also qualify based on their performance. So we are already talking to them.
Okay. So this 1300 crore order book, if I was to break it in two parts, one is short cycle, short being less than 6 months and long being less than a year. So what is the ratio in that short cycle versus long cycle?
I think the majority, 90%, I will say the short only. Now we have very limited one on the short cycle, hardly that space also not a very long cycle. We have to complete, already we are delayed, within 1 year we have to finish.
Okay, so thank you for answering the question. Thanks a lot.
Yeah, thank you.
Thank you. The next question is from the line of Dhwanil from Hinglaj. Please go ahead.
Hi, sir. Can you throw some light on the debt? Where do you see the debt at the end of this year, and when can you expect it to go to, 1920 numbers?
Hey, your voice is very feeble. Can you just increase your voice and repeat the questions, please?
Yeah. Can you hear me now, sir?
Yeah.
Yeah. Can you throw some light on the debt? Where do you see the debt at the end of this year, and when can we see the sub 100 levels?
Yeah, we have debt part is not very high. In fact, 100 crores we have taken for the capex, for our capital requirements. Balance we have the money we have taken for the working capital. So that anyhow we are going to, it will be there, but it will be going up and down. But we cannot, we are not getting any advance, any money there. So that normally if you see other defense company, if you compare, they will get always surplus because they get the advance from the big ticket projects. The projects will be there for 5 years, but they will get the advance now itself. So that is a difference will be there.
And to your question, further to this 300 crores working capital that is there, which because of the inventory and others in our receivable, Once we get the orders, the 300 crores we will maintain as per same one. But coming to 100 crores long term debt, this year repayment starts every year 20 crores we will pay. Slowly that down the line this 100 crores will be repaid, and we are always planning to meet our capex requirement, those things from internal generation only.
Thank you.
Thank you. The next question is from the line of Mr. Amit Dixit from ICICI Securities Limited. Please go ahead.
Yeah, hi. Good afternoon,
Hi.
sir, and
Good afternoon.
thanks for taking my question. I have 3 or 4 questions. The first one is, in this quarter, we saw that raw material as a percentage of VOP shot up. Now, what are the key drivers for that? Was it molybdenum price, and where do we expect it to settle at in this quarter? Because raw material prices seem to have stabilized, at least as of now.
I think if we have asked me that it was seen, raw material price has been stabilized right now, you tell.
So what would be the sustainable raw material cost as a percentage of VOP? I mean, if there a number or a range you can give us?
Raw material cost, we have total
around 40%.
Around I'll say
around 40% is the raw material cost.
35.5, 35.
The VOP overall, see, the quarter to quarter, why it will change, na? See, sometimes when we produce the material for our strategic customer, there we use virgin metals more.
Yeah.
Then my raw material consumption will be more. When I use for other customers, if I use, then I will use more scrap, the plant reverse. Then my raw material consumption will be less. Like that it will change, more or less, always it will be around 35% to, sometimes it may go to 40% depending upon the product which I am manufacturing. Coming to your next question, moly and other prices. See, initially due to Russia-Ukraine war, the prices have gone up. And sometime, normally Midani, we buy for 1 year, our 1 year requirement, seeing the price trend. Recently, moly prices have gone up. When it has gone up, we have taken a decision that we should not buy full requirement of the year. So we have purchased only emergency basic requirement to not to stop the production. But subsequently, if you see recently, the moly prices have come down, nearly 40%. So it is given an advantage by not booking the order, purchase supplier order. I could save some 40% of cost. Now I placed a new order. I will sell in the price per kg. It is earlier it is 9,000. Now it has come down to around 5,000 and odd. It saved me nearly 4,000 rupees per kg. In the same way, some other materials also, the nickel, you know very well, nickel has gone up to $100 per kg. Now, earlier days it is only around 17 to 18. Now it is stabilizing at 22. That's why if you see my inventory, raw material inventory also, last year I have an inventory which could save Midani, even though price increase is there, I didn't venture into the market. But now the prices is stabilizing at $22. Now I am buying nickel for my requirement. I am also seeing other materials also. Only issue now is titanium sponge, which we are also sourcing slowly. That's why if you see that my inventory is level for, now it is in the range of 100 crores. Hope I am clarified you.
Yeah, sir. Thanks for the detailed explanation. The second question is on the scrap usage in this particular quarter, Q4.
Scrap usage?
Yes.
Scrap usage have been very high. In fact, if you see in terms of tonnage, it is almost double from previous year. And the saving is almost 60% scrap we have used in the quarter 4. Last quarter, if you compare the last year, it was 40%.
Beginning of the year, if you see, our scrap was only 40%. Quarter-wise, it has gone slowly up. At the end of the 4th quarter, we have used the scrap 60%, virgin 40%. So we started identifying usage of scrap, and we started using more of scrap.
The scrap management team has done a very good job, and it is already, this is a total achievement of our operational team. They have done very good job by optimizing this, because our scraps, purity of the material is very important. And we are not using only 1 grade, 2 grades. We are getting more than 100 grades. Managing the all grades, scrap, and then without mixing is a big challenge. So that has been done by our team, and that's why as we have told you, our scrap consumption has gone up.
Great, sir. In your opening remarks, you mentioned about some of the good opportunities at Rohtak facility and white plate mill. So, we actually expected to obtain around 500 crores of revenue in a steady state from both these facilities individually. Now, for FY24, how much revenue can we expect from both these facilities?
Yep, put together it may be similar to that.
So similar to, 500 crores put together, Rohtak and white.
Yeah, see, it is nearly because we have many things here to still get stabilized.
Right.
Because 1 grade is there, which is already we have done, but if you see that whatever we are doing, margin still will go up. So it will going to that, nearing to that.
Okay, sir. One last question, if I can squeeze in. What is the order inflow we are looking in FY24? Somebody asked about FY23, of course, but in FY24, what kind of order inflow we are looking, and from what platforms we are looking this particular order inflow?
There are many things under pipeline. One is that you must have seen now the missiles also requirements have gone up. So I am expecting that we'll get from the missile sector also. We are expecting, as I said, about the space also we are expecting, and defense also. In fact, this quarter, as I told, that quarter one this year, first quarter itself, I am seeing that we can book the order of around 500 crores. So we'll see as we progress quarter 2, quarter 3, but all orders which is coming now, we have to execute very fast. We are also seeing now the export order, there is an inquiry of around 200 crores inquiry worth is there pending with us, and we have to see that how quickly we can dispose that. So orders is not the issue, how quickly we can execute and give to the customer. This is the challenge, because nowadays if you are going to the segment where it is not a long-term project, we have to supply the material in very short time. People are not willing to block their money in the raw materials. So it is the turnaround time is very less. We have improved many areas in that side also, and there are certain examples where we have completed the orders, received the order, then we have done the melting processing. In 2 months, 3 months also we have supplied. So those things are there. Let us see in that.
Okay, great, sir. Thanks a lot and all the best.
Thank you.
Thank you very much. Ladies and gentlemen, due to time constraint, this was the last question. I now hand the conference over to Mr. Amit Dixit for the closing comments.
Yeah, thanks everyone for attending this call. And thanks Dr. Jha for answering the questions very patiently. Sir, if there is any closing remark that you would like to make before we close the call.
First of all, I am very much thankful to all the investors and for their active participation and keeping very close watch in the performance of our company. Believe me, your this type of involvement is also making us to drive and strive for the excellence. But as you know, defense, we have certain, we call one word patience. So you people are keeping patience, and definitely I can tell you on the behalf of the management, we are not going to disappoint you. Many technological developments which we have done this year, I feel very proud of that. Very difficult to mention at this juncture everything, but many, whatever we have mentioned so far is going to give a lot of, I think, advantage in the future. As I talked about the development of axles for the railway, development of the materials for energy sector, C276, development of the alloys for export. So there are many firsts are there in this year. So probably those things are definitely a strength for the company. And I am sure that the current scenario in the world where there is a scarcity of the raw material, because the many raw material suppliers who are leading suppliers, their capacities are not running at the full scale. And that is where Midhani has a great potential. In fact, we have done a market survey in the different countries, and we can find that many things where we can capture in the export area. So you will find that your company will be moving towards aerospace and export in the big way in the coming future. And many projects which is going to be announced or given, many things we cannot also tell in the open platform because our certain projects are very secret in nature. But we are very much in that, and their development, their work also is increasing now. So you will find that I may not be able to give you what are the grades and all, but in terms of the volume, it will go up, our order book condition and all. So once again, I thank you all, and also both the directors stayed with me, and along with the company secretary for making this conference call possible today. Thank you.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.